Yo, what up? What's going on? How's everybody doing? Oh yeah, it's raining over here in Dish, and I got all day to hang out with you guys. Hot damn, Mr. Galfi, what's up? Radoslav, da svidania, motherfucker. Hemant, what's up, baby? Umar, my friend, what's going up? Mr. Shah, how are you? Thank you for joining us. As always, it's a pleasure. Raphael, how are you? Guys, have you guys been surviving this crypto crash? Everybody been surviving. It's wild stuff, isn't it? It's wild stuff, but we have seen it before. Now, the question is this the end? Isn't that the $1 million always question? That's why you pay me the big bucks, right? I'm supposed to be a guru. I should know this answer. Is this the end of the crypto bear market? Imagine just flames were coming out of my hands. I wish I had special effects. All the Bitcoin guys get those cool special effects. When you're like cyber nerds, man, you can do cool shit, man. So the question is the crypto bear market over? And the answer is, we don't know. We don't know. It could just be a dead cat bounce, or it could be something more meaningful. You know, we don't know yet till we start to see what is going on with the secondary moves. See, when you get a market, it gets really oversold and really extended to parabolic to the downside, the bounces will be fast. They'll be intense. But that's just, it could be just a relief bounce. So we don't necessarily know till we know. But what we can do is start looking at our charts and start to make some reasonable assumptions and look at some probabilities and patterns to start to figure out if there could be potentially something there, right? So let's take a look at the overall market, and then let's get some charts out, look at the overall market, and then from there, you know, we'll start getting into maybe some potential plays that could be working or not working. So let me bring up my charts, and let's take a look and see what's going on in the hood. Cool. So let me know when you guys can see this. Oh yeah, all right, it's coming. So let's first, and we'll get rid of these intraday charts, just get into the dailies for now. So let's first take a look at the good old-fashioned, right, the BTC. So this is one of the issues when you are in a downtrend versus uptrend. See, when you're in an uptrend, all supports, bounces off moving averages, everything works, right? Most of the tactics that we use as traders are trend related. And so in absence of uptrends, then, you know, a lot of the things that we use don't work. Now, it's not to say that there's not a trend. We're just in a downtrend. But in crypto right now, really besides Kraken, Polynex, and a couple places, shorting is really tough. And so you've got to always be just wary of it. You know, so when you're trying to long and go counter trend, things get really, really dicey. But overall, right now, what we have here is a series of lower highs. You notice how every time you pop, so you flush down and you pop, that's a lower high. You flush down and you pop, that's a lower high. You flush down and you pop, that's a lower high. You flush down and you pop, that's a lower high. You flush down and you pop, So far, it's a lower high. So how do you break the cycle, right? Because that's what we're in. We're in a cycle, right? It's a cycle of despair. That's what traders call it. When I see my students and they keep trying to long something and then it just goes back down, we call it the spin cycle of despair, meaning that you keep trying something and it just don't damn work, right? So how do we know if the true bottom is in? Well, there's a handful of things that we can look at to figure out. So as of this moment, we dipped down into the 5,000s, coming back into this kind of support zone. You can see from over here, right over here. There's a little bit of support. So we're getting an oversold bounce essentially into that area. Now, well, a good chunk of the bounces happened. I mean, we went from 5,900 to 8,700, almost to $2,500 bounce, right? So the easy money is over. Now, what happens after the easy money is over? What can we do? What do we need to spot to make sure that we get a secondary push? So a couple things that we need to see before we know that the bottom is in. One is you can see right off the bat that every time BTC hits its 9 EMA, right? 1 test, 2 tests, 3 tests can't hold, 4 tests, 5 tests, 6 tests, 7 tests, 8 tests, 9 tests, 11 tests, now 12 tests. Every time it touches this 9 EMA, let me brighten that 9 EMA for you guys so you can see it. Let's get that thing a little brighter. Oh, yeah, that's nice and shiny right there. It glows. Woo! So you can see every time, and this happens in uptrends too, right? If you're really trending hard, you'll ride up that 9 EMA. When you're trending down, it goes just the opposite. Test, 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 test. So we smacked into it today, right? Less like we smacked into it before. And so do we know if this is the real bottom? Because, well, I mean, we've had some bounces before. Didn't this feel like a bottom? And then, right, like when you kind of came down to 12,000, didn't this run to 17,000 kind of feel like a bottom? The bounce always feels like a bottom. Always will feel like a bottom because we as people are taught to do what? Right? We want things to go up. We look at things as going up. Hey, Josh, are you in here? Oh, good, good, good. So to see if Bitcoin is truly bottom, you've got to start seeing a few things. Number one, we want to see a break and a close over this 9 EMA because that's where everything has been fading off. That's where everything has been fading off. So we need a break and close over that 9 EMA. So that's number one. Number two, we have a series of what here? What are all these things? Whoa, cool. Hold on here. Brush. What are these things here? Man, how do you change these colors? Whatever. Each one of these is a series of lower highs, right? So to actually kind of remove ourselves from what's going down and really think about this, we have a few different things that we can use. Number one, we've got to close over the 9 EMA. Number two, we need to make a higher high. You're right. We need, Yassine, what's up, baby? So we need to break over this level, that's the previous high, right? So we need to break over it because that will end our series of lower highs. So once we break over it and then it pulls back, then we'll have a higher low. You can use Binance, by the way, Yassine. I do. So that's where we need to go. We want to see a break and close over the 9 EMA and then a higher high. Once this happens, your 9 EMA should start to curl back up. Once it starts to curl back up, guys, then what's going to happen is you're going to start building out some support. And the structure of the chart is going to change. See, as traders, we need to always be using our imaginations. We need to think about what the chart will look like if the things that we need to see actually happen, right? And so that's where we're going to be going with this. And if that does happen, then I think we're going to start making a run. Now, will we get back up to 20,000? I don't know, right? We're not in the game of taking guesses. I don't believe in unicorns. Never have. Well, I did for a little while, but you know, I was 18 and I was on drugs, and what are you going to do? But I don't anymore. And so we don't know. This is what I do know. When you're under this much resistance, it's going to take months to get back up to 20,000, if not longer. There's just too much supply, too many bag holders, right? You guys know what bag holders, right? Anybody hodl? Anybody hodling anything from way too high? Well, if you're hodling from too high, you're a bag holder, aren't you? I was 18, I see. Maybe 16, who knows? But a lot of people were hodling, right? So you will see waves of selling along these kind of inflection points, and that's why it takes time to kind of get through it. What you got to do is test an area, then it's going to come back down. Then you got to test an area and it's going to come back down. You got to test that area again. Sometimes you may have to test these major levels multiple times. Like, for example, this 10,000. We sat on that 10,000 area for weeks, didn't we? So, guys, remember the one thing about price. Price has a memory, right? Price has a memory, meaning that significant levels from the past become significant in the future. So this 10,000 was acting as support for quite some time. So now on the reverse side, when you come back and test, the volume doesn't matter. It's always like that. You don't need volume to shred. Don't need volume to shred. So this 10,000 is going to be resistance too, right? Because it was such strong support, now there's going to be essentially a huge level of resistance up in there. So we've got still work to do. We got to close over the 9. Then we've got to get above this level to make it a higher high. Then we've got to thrust above 10,000. If we get above 10,000, then we're good to go. And guys, you don't need a huge volume selling on dumps. And the reason why is that there's a million different exchanges out there, and there's going to be dark pools and other things behind the scenes that people are selling. You know, heck, I had 30 Bitcoins at one time, and one of my business partners, I'm like, how do I get rid of all this? He goes, dude, I got a guy that brings you a bag of cash. He just flies to wherever you are. He gives you the cash and you give him the USB drive. That's how major Bitcoin transactions take place. There are no such thing as whales that trade on GDAX. No whale is going to trade on fucking Coinbase. You know what I mean? That's all smoke and mirrors. So you can't really worry too much about it. The other problem is this. You want to see heavy volume selling. The light pullback is no good, because you know what that means? That there's a lot, if there's no selling here, that means there's a lot of hodlers just sitting around waiting to sell, right? Waiting to get their money back. And so it creates more resistance. When everybody sells, you flush out the system and you're able to restart. You know, so that's you know, an old adage. People people read volume wrong because people read books, and so they just assume that this is the way it's supposed to be. But light volume selling is bad on a crash. You want to see capitulation, right? And not to mention, there are no big players that trade on fucking Coinbase and stuff like that. No millionaire is going to be trading on Coinbase. Like, it's crazy. You can't do anything on that thing. And you know what? The recovery has been okay, but we've had bigger days. You're talking about it's been okay, but we've had bigger days, and we'll have bigger days. But I think this is where we need to see. So I would say that for right now, it's constructive. It's kind of positive, but it doesn't necessarily mean anything. We very well could just fade off at this 9 EMA and curl back down. We don't know. We don't know till we know, and that's kind of that's just the nature of the game. So we'll watch these things and make sure. Yeah, nothing is set in stone. That's just the way it goes. Now, Ethereum is a lot better trader than Bitcoin. This one's had all sorts of fun shenanigans happen to it recent, but the one thing is that it had a major dump, right? You went from 1,400 to 500 too. Now, this is the problem with Ethereum, right? You've now bounced from 500 to almost 900. So, like, a lot of people are waiting to get in, but the move already happened. That was the move. When you're looking at a crash type of move, that is the move, right? So same type of thing with Bitcoin is that we need to see a flattening of the MAs, and we need to start breaking over some levels of resistance. These charts have been damaged, right? And damaged charts require a lot more work to fix. It's easy to fix a dip when you're in a trend, but when you've broken trend, it's going to be a little bit slimmer pickings here. And so I would say this one is it's got less room to run right now, but we need to see what's going to happen. If it pulls back a little bit and then busts through, I think that's where you're going to want to get interested in this stuff. And so in the end, are cryptos going to bounce back to high? I don't know. Don't even care, right? Whether they do or not doesn't really mean anything. If they start fading off, we'll just short them again. The beauty of kind of cryptos is, and by the way, Kraken's platform is working really well again. The beauty of cryptos is that, like, this Ethereum used to be a couple bucks last year, right? If the market fades off, man, we've got 800 points to short this thing down to, right? Most likely all these things are probably turds, and if they're not, who cares? We've got 800 whole points to keep shredding this thing back down to $5 if we needed to. And so I'm not too worried about if this is the end of the crypto market or the beginning. My gut feeling is that, we're still in the second inning of a long game, but my opinions don't matter. That's just my gut feeling that we're in the second inning of a very long game in cryptos. But, common sense also tells me that there's no way Ethereum should be at $1,400 when I saw this thing at $3-4 the other day. So that's just kind of the way it goes. Ethereum, we need a little bit of pullback and then a break over the 9. I think we can be good. Now, the other thing to remember is that these cryptos on the day trading side, on big flushes, you are getting good bounces. So anytime you intraday start to see like this type of stuff, guys, where you go from like 850 and you just keep downtrending down, once you drop a couple hundred points, you are getting some massive spikes. And so you can intraday you can make a lot of good money intraday trading this, even if your hodling is a little bit off the books. Yeah. There's going to be some good ones here. I think this LTC is another one. Out of all of them, I would say the LTC has probably the easiest chart because it's held its 200 SMA and it's already breaking over its 9 EMA. you've got much more convergence there. You've got a lot more convergence there to really make something happen. So I'm excited about this LTC. I think that we've got kind of the turn here. And the reason is too, is that, you know, this 100 mark was like a big kind of breakout area, right? In the past. My line drawing skills on TradingView are really missing these days. But this kind of 100, 110 area tends to be pretty important. You can see test, 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 test. And we've come back and tested that. And this thing has really moved. I haven't used whale clubs before, but I have used Kraken, and this platform has stunk, but it's been working fine right now. It's been working fine. I've been using it. So I think LTC out of all these has probably the cleanest chart. Ethereum has the messiest chart, I would say. You know, if you think about like this one's got some support built in. See that? And you're kind of like in a convergence zone here, where like Ethereum is a little bit more messy right now. You know, it bounced down kind of into the middle of nowhere, and then it's just popped back in to resistance. The one thing with Ethereum is its pattern is just really loose right now. The volatility and the selling has been huge, but its pattern has just been loose. And so, you know, right now I've been trading a little bit more. I've been trading both Ethereum and LTC, but Ethereum I would not be. I'm not trying to hodl that thing for a longer term thing. It just makes a really good day trader. But I will say that this on a swing trade basis, this is the one that I think is looking a lot better due to the support zones that are building up underneath. Now, a couple other ones that, you know, I've been looking to try to get into. This BNB looks a little bit like BTC. After that big crash, you just bounce right into the 9 EMA. It's got a little bit more work to do. You know, you may have to pull back and then bust back over this. You can see just like BTC, this one keeps fading off at the 9 EMA. So till it gets over, I would be just a little bit mindful of that one. Guys, in terms of the brokers, I know I see you guys talking about that right now. Look, in terms of the brokers, split the money up. Don't trust any of them, okay? And the reason is this. Binance looks all fine and dandy. They got a nice iPhone app, all that stuff. It's still a Chinese company, right? And I guess they moved their offices to Hong Kong. I love how people say, well, it's Hong Kong, therefore it's different. It's like, no, it's not. Ask the Chinese government if they think they own Hong Kong or not. It's all the same, you know, and it doesn't matter, right? If it's not American, I ain't trusting it. And even if it's American, I'll probably trust it even a little bit less. So got to be mindful of it. So I believe in splitting it up. So this is how I do it. Majority of funds stay at GDAX Coinbase. Why? They're American. They may or may not have a license. I don't know. They claim they have those licenses or whatever. Their deposits are insured. I don't know. It's their website looks easy enough. The other part is this. When I was in Coinbase, GDAX, when the flash crash happened in Ethereum, where it went from Ethereum went from $300 to $1 that in one move, and then it kind of bounced right back. And I was on margin. So at the time, GDAX had margin, and they had like 5-to-1 margin. And I was on margin, so they just margin sold me out like randomly at like $20. You know, I didn't have an order there, right? But they just kind of randomly sold me out, and most of my account was gone. And they actually returned the money. I sent them a nice email, and they said, no problem, we're reversing all these trades. They put the money back in my account. So they have some level of stability, but also they don't reek of Ponzi scheme as much as the rest of the brokers. Don't the rest of the brokers kind of, they reek a little bit of Ponzi scheme. They just do. They all smell like it. They all look like it. You ever go on your Binance app? And like, so my Binance app, for example, right now on my iPhone, you can't download it from the App Store. But when you go on Binance, they say, hey, you have to approve this device. So mine says, it was like Chinese Veterinarian Hospital Limited, Guangzhou. And and then it says you have to trust that developer. And it's like, so here you are going to Binance, downloading the damn app. Then they say you have to trust the developer, but the developer is like, welcome to Guangzhou Veterinarian Hospital Committee for Gorillas. And you're like, all right. I'm like, sweet. But what's weird is that their app is really good, right? Like they at least made a damn good app. At least you could say, that, right? You can't even say that. I mean, Coinbase has, right? They're getting thousands of customers like a week and a day or whatever, and they can't make a damn iPhone app. Like you got to go on your Safari and be like, so gdex.com, and then right, like you're just sitting there trying to punch in your fucking passwords and shit. Yeah, it's a little bit wild, man. They're greedy motherfuckers over there at GDAX. But I keep a majority of funds at Coinbase GDAX because it is American. We did save the world in World War I. We did save the world again in World War II. And therefore, we trust America, right? We're the defenders of truth. And so, I keep a majority at Coinbase GDAX. From there, for smaller coins and stuff like that, right? I go in, and I've got a couple things going on. I go in, I got a couple things going on. Number one, is what? Well, Bittrex. Bittrex is in Seattle and so on and so forth. It ain't false. We all watch TV. None of us were alive, but we all seen it happen. Now, number two, Bittrex. That's where I keep kind of a third of my funds, maybe a little bit more than that. And then the other stuff is in Binance. All right. Hey, crypto, go fuck yourself. How's that for yelling? That's how I talk, motherfucker. Now, sorry, I apologize. I shouldn't call you motherfucker, even if you are one. But Binance is where I keep a small portion of it. They got the best app and all that fun stuff, and so on and so forth. So, bam, bam, bam. That's how I split it up. Now, I'll keep 10% of my account at Kraken for shorting purposes only. You can keep less money at Kraken, guys, for one reason. That at Kraken, you have margin. So if I wanted to play with Ethereum, like if I want to short Ethereum, Kraken will give you 5-to-1 margin and so on and so forth. And yeah, you see, of course, cryptos is worth it because this is where you get the momentum. You know, you get 100-point, 200-point moves. You know, that's where the action is. Look, in the stock market, you can get in your NVIDIA trade and you get 50 cents and you're like, oh, I got this awesome trade. In cryptos, when we get into Ethereum and all of this stuff, dude, I mean, we're getting in and taking 100-point trades. And so it's a little bit different. Polynex also has some good stuff. And we're getting a little bit of a rollover in the markets. Let's just take a look here real quick, guys. So we're starting to see intraday. Hold on. Tell me when you guys can see the screen. Tell me when you can see the screen. Was that a good yell? Oh, yeah. All right, so we're just kind of coming back into the VWAP area right now. It's not a huge big deal, but we'll have to be careful when you start to pull back. If you get like deeper pullbacks than that VWAP, then you've got to be really, really careful. Like if it starts getting back, if it breaks too far under this thing, you got to kind of dump out of some longs and raise a little cash. You know, that VWAP is like the line in the sand when you're looking at things, and it's never exact. Like if you break under a little bit, you may just break back above. So you definitely don't want to like be too overreactive. But I like to just kind of use it as a way to see what's really going down with, you know, the majority of people. What VWAP means, guys, is volume weighted average price. And so, you know, what we have to be doing is, you know, when I look at the VWAP, you look at it as like kind of the average price for all the buyers and sellers rated by volume. And so in, I'm sorry, Extreme, what did you mean by, what was your question? Let me go back into it. I didn't see it, my bad. So that's where we want to see these things. You know, I like to see these things hold. But we'll see. We're just kind of getting a quick dump right now. It doesn't mean anything. Guys, one thing to remember, if you guys can give me the rundown, like what do you guys trade in terms of 5-minute charts, 15-minute charts, 30-minute charts? Hey, Jerry Brown, downtown Jerry Brown, how are you? What's going on, my brother? Good to see you, by the way. So one thing I have noticed, guys, with the cryptocurrency market currently is if you elongate your time frames to 30 minutes or 1 hour, it will keep you out of the chop in a lot of trades. It will keep you out of the choppiness in a lot of trades. Like, so for right now, like if you are getting stopped out a lot, or you're nickel and diming yourself a lot with like smaller like trades, like I'm losing $5 here, $10 here kind of thing, what you should do is go to a 30-minute or an hourly chart, and that's going to help you stay out of a lot of choppiness. It's something that I use quite often. I've used Bcash also. It's not so bad. And you're starting to see some selling kind of come into this. So watch your hourly charts. See if they start to, you know, if they just let go of support, that's okay. You may have to bounce out of some things, raise a little cash, and then go back. I personally don't use BitMEX. No. So, guys, some of the guys have asked me, like, why is there so much volatility in the cryptocurrency market? And it's not necessarily volatile at all. Bitcoin went from $1,000 to $20,000 in a handful of months. It's got to come and shake itself down. And yeah, there's been some news pieces and federal this, that, but none of it really matters. Common sense says something goes from 1 to 20,000, then yeah, it's gonna sell off, and it's gonna sell off hard, right? You know, in the end, we've really only given back a couple months worth of gains in the crypto market, barely any. You know, Ethereum is still higher than it was in December, right? And Bitcoin is very, very similar. These things have given back just a small fraction of the gains. And so that's where we've got to be just really kind of cognizant to say, you know what? Yeah, the market's been volatile. The market's been stressful, but we were up a lot. Yeah, we were up a lot, and this just kind of needs to happen too. Guys, one of the things to do is remember that there are no unicorns in life, right? You know, we don't believe in unicorns. We manage our trades, and these things were, what's the proper term? Long in the tooth, short in the cock, right? Everything had gone up so far, so fast. I mean, you're talking about Ethereum's like $5-6, right? And then 12 months later, it gets to 1,400. Sure, it made the technology. Like, I love everybody's like, the technology. Well, look, the technology was the damn same 12 months ago when it was at $5 as it's at 1,400 bucks. You know, I'm not saying Ethereum is good or bad. I don't care. But common sense tells you that things don't run up to $1,400 or $20,000 without needing a breather, a pullback. These pullbacks they're healthy. They're buying opportunities. They allow fresh buyers to emerge in the names. See, the way you got to look at it is that there are people that have been wanting to get into cryptos forever, right? These cheaper prices allow a whole new set of people to come in that maybe have been staying away from cryptos, right? So there's a lot of different things that happen. But look, in the end, it's a good thing because it gives us cheaper prices too. You know, if you believe in cryptos, and I'm going to be trading this stuff long term. I trade more cryptos than anything right now. But there's, a little pullbacks give us new opportunity for us to get into these things. And I think that's going to be huge. Some of these things like, Litecoin and stuff, man, they look pretty good right now. And I like that. I like that. I like these kind of cheaper levels. I don't know if you can buy anything with crypto products. maybe what were those, cats or something? The kitty cats or crypto cats? Well, you know what? The transaction fees for Bitcoin are so heinous that I don't know if anybody's going to be able to use it for a bit, but sure makes a good trader. So yeah, whoever was just asking about Litecoin, I do like it because as long as it holds above this 100, I think it's starting to kind of construct some patterns over here. Crypto kitties, that's what it was. Man, you guys know all sorts of stuff. Crypto kitties. Hey, Mr. Goldberg, how are you? Thoughts on BCC versus BTC? On the fundamental side, I don't know much about BCC or BCH, except that, man, this thing was like a couple $100 a few months ago, and they got spiked to 5,000 somehow, and it's just kind of coming back. So same type of deal. You're going to need some rounding. You're going to need to break over that 9 EMA, but I don't have a personal belief on the fundamentals of it yet. Hey, Cocos, how are you, brother? Well, let's take a look. So, guys, Coco is asking about IOTA. IOTA is a real tricky one. This thing is just, it's collapsed hard, right? It's given back all its gains. But, it is sitting on some small measure of support. Frankly, this is what IOTA looks exactly like. Well, overlay this chart, memorize this chart, and then look at this chart. It looks the same, right? IOTA is just kind of following the Bitcoin. So if you think Bitcoin's going to bounce, then IOTA could just be a supercharged version of getting some risk and, getting it going. Brian, man, 10 points to you for that one. Yeah, Neo is probably one of the best traders out of the group. I will say, I think that Neo, out of guys, if you guys are looking for one of the coins that just has a lot of range, Neo it can go from 60 to 120 in a couple days. There is some good range on it. Jacob's question, guys, do you think there's a chance LTC needs to play catch up to the downside and that it's not going to outperform? Yeah, Jacob, there's a chance for anything, that's for sure. Anything can happen. Hey, Jeff. Jeff's mentioning which one do I trade the most? Guys, I would say that not a majority, but probably more than half my trades are usually in Ethereum. I find Ethereum to be just the best mover out of the group. I find that it's got great liquidity. It's the best mover, and frankly, it's just really been always my favorite, mainly because it was the first one that I ever traded. But I like Ethereum as just a good. I day trade this thing every day, no matter what it does. It's just got incredible range. Hey, Blazing. Yeah, I don't know. Maybe. I haven't been taking on any one-on-one students for a while, but I definitely would keep an eye open. Let's take a look at CwK. All right, so this thing went to 7, and now it's pulled back to 0.200. It kind of just looks like the rest of them. I can't really get a good read on it. Let me see what the USD looks like. Yeah, I don't know. I'm kind of. Hey, CryptoK, what's up, baby? Is it better to have a lot of random coins or a lot of good coins? I would go with, I would go with good coins that have the potential to act like they're, random ones. Meaning that, CryptoKid, there are like formulas, right? There's like formulas or like themes that happen in the markets. Meaning like, if there's a theme that ICOs are going, or like junky ICOs are going, or pot coins are going, you know what I mean? Find out the themes. And so if the theme is like a bunch of random ones, figure out that theme and then pick the ones with the best charts out of that theme or sector that's working. That way you're still applying chart analysis so that you can manage your risk, but you're also capitalizing on just like the wild volatility. So, you can definitely kind of mix and match those things. Because the one part is anything random means that you're taking a huge guess. If you're kind of trying to catch the 2 big winners out of 100, I mean, that's going to be really tricky, right? So I'd rather you go in and really, narrow down all the random ones that are jumping and then look at the charts and then find ideal entry points. I think that's going to be, I think that would be probably the best way to do it. Just so you don't, waste your time and your money and all that fun stuff, that people do. Now, on the other side of things, yeah, Mohammed, let me get into that. So let me get and share. Man, I got to find. What's the software that some of them YouTubers use where it's like the guy's face is on the corner, but you always see his screen? I hate going back and forth. Anybody know that one? Yeah, Jeff, I've been playing a little UVXY. Josh, man, you got to set that up on my computer. I think the Crypto Shredder uses it. I think it's like called OBS or something. So, Mohammed, in terms of like EMAs and stuff like that, on my daily charts, I use, let me grab a chart here. On my daily charts, I use a 9 EMA, a 20 SMA, a 50 SMA, 200 SMA, and then volume and stochastics. And then on the intraday, I use a 9 EMA and a 20 EMA and a VWAP, and a VWAP. And so we use them for different things. So, Mohammed, trading is all based on patterns. It's all essentially based on setups, right? So, what we're looking for is different types of patterns that would work on a particular coin. So like I have like 10 different patterns that I primarily trade, right? And so different moving averages react with different patterns depending on the time of day you use them or where in your trend you're using them. But for layman's terms, your 9 EMA is your shortest term moving average, right? It's your short term moving average, meaning that it's going to tell you the trend on a short-term time frame, and you can see that by just looking at the slope, right? Up slope means that your short-term trend is up, down slope is the downside. Your 20 is your more intermediate term time frame, and then I use VWAP as kind of like a line in the sand. This is like a multi-hour discussion in itself, how to set up charts and all that fun stuff. But essentially, we use these moving averages for two reasons, Mohammed. One is to help us identify trends on particular time frames. And the second way that we use moving averages is by using them as potential areas of support and resistance. Potential areas of support and resistance, meaning that they could be areas that we use for bounce points. They could be areas for sell points, and that's going to be always a big part of what we do. Hey, Ms. Jeff Johns, yes, you can short coins. Hey, Mr. Goldberg, how are you? Guys, Mr. Goldberg is asking, like, when you're making Binance trades, are you going into Tether, then out of Tether? So what I typically do is if I'm going to trade on Binance that particular day, I may transfer. I keep a little bit of coins in Binance, and then, I'll pair them, or I'll just send a couple new ETH coins into Binance, and then I'll flip them to USDT just for that trade, and then I'll cash them back out in ETH or something like that. Mr. Highlander, how are you? What is your best advice on how to time an entry after a crash? You got to hunt for patterns, right? Hunt for patterns and hunt for areas that you're potentially going to get stopped on, that's going to hold. That's all you can do. You're going to use overbought, oversold, patterns, support and resistance, stochastics, volumes, and you got to build yourself a case on where these things should hold so that we can get in them. And when you do that, you'll start to build yourself a picture. See, what you got to remember is to take a trade, you've got to look at it like you're a lawyer, right? Meaning that, you've got to go in before you take a trade, you've got to say, what are all the pieces of evidence that line up in my favor for me to catch a crash, essentially? What are different things that could make a coin stop in its tracks and start to bounce? One of them is price support. The other one could be a moving average. You couple that with overbought, oversold indicators. You can use Bollinger Bands. And then what you're going to be doing, right, is you're building out a case of when you think you may want to try to bounce something. Then what you're going to be doing is looking intraday to start hunting for reversal patterns. So you may look for like a 1, 2, 3 pattern or some type of double bottom pattern for you to start to bounce. And that way you can manage your risk, and then you can catch them to the upside. That's usually the easiest ways to get an idea on the big picture, and then look at a smaller term picture and start looking for that rounding action and then different patterns that indicate a reversal, and then you time them to the upside. That way you're using precision when you're actually trying to time a crash. Guys, being precise and having precision is the key to everything in a crash, because you don't know how low they can go. And so what you need to do is wait for that kind of rounding action intraday so that you can manage your risk. And usually it'll be like a double bottom. You'll test it, you'll pop up, then you'll come back and test it, and then you start to build higher lows and stuff. Those are usually the easiest ways to come in and still manage your risk, because you can put your stop loss right under. And from what I can see, that's the easiest way to kind of get both of them together so that you're nailing your entries. And guys, there is no such thing as indicators that tell you when to buy and sell unless you believe in unicorns. Imagine that, right? Imagine that you could draw a squiggly line on your chart and it would tell you when to buy. How awesome would that be? We'd all be just fucking bajillionaires. But it doesn't work like that. Remember, to get into a trade, you have to build a case. I want each of you guys to think of yourselves as a lawyer, right? You have to go in and assign pieces of evidence and align them in your favor piece by piece before you take a trade. So always the first piece of what in a pattern? What's the first thing that you look for on a chart? What's the first thing you always look for on a chart, on your daily chart? Patterns. So TJ, my man, first thing you want to do is look for a bounce pattern, right? A bounce pattern, meaning I'm looking for a reversal pattern. So that's always number one, the first piece of evidence that you're going to be looking for. The second piece that we're always looking for on a chart is what are areas of demand that may hold up a chart. So there's two types of supports. Number one is price support. Former areas of inflection points that may have kicked up the stock. Now when you come back and retest them, they can act as bounce spots. The second part would be moving averages. Moving averages can be areas where you may start to get some demand come into a particular coin. What's the third thing you can assign to a chart to help you figure out probabilities? You look for volume patterns. Are we in accumulation or distribution? Right? During reversals, you should start to see, right, the volume come in after the fact. The second part is going to be, right, where are my stochastics? Typically, TJ, when you start to get the bounce areas, your stochastics will start to get under 20. That indicates oversold. That's always going to be just something to kind of keep an eye on, right? So I want to look for readings that get to 20 or under. That usually tells me that we're getting to levels where a potential bounce may start, because stochastics tell us if you've fallen too far, too fast, like it's an obscene fall, right? And so that can indicate, it doesn't indicate a reversal, a permanent reversal, because nothing can tell you if it's a permanent reversal. The only thing we can do is, yeah, I don't think you need it, Kyle. The only thing that, well, yeah, you probably don't need it, Kyle. I mean, it's just beginner stuff. Now we start to really overload stuff. So RSI and stochastics are not the same. And meaning that RSI, commonly people think RSI means oversold, overbought, but that's not the case. What does RSI stand for? Does anybody know? So what does RSI stand for? RSI stands for Relative Strength Index. So nowhere in there does it mean overbought, oversold. What RSI is really used for, but a lot of rookie traders and rookie trading books, these people don't trade for a living. They talk about RSI. But what RSI is actually used for, if it's done properly, is to spot divergences, meaning you're comparing the strength of two different trends. Relative Strength Index. So how does one instrument compare to its actual index? Does it have strength or not? For example, Google is a tech company, right? So Google's RSI would be, right, how does it trade the strength of its trend in relation to its index? Because if you get too far or too below, right, the normal strength of your index, you may be getting too stretched and you have to have some type of mean reversion. It's a divergence indicator. Bam. That's why they call me daddy. No, I'm just kidding. Relative strength index, right? It's in the name. Rookies use it for overbought, oversold. But no, it can mean overbought, oversold if you are looking at it in a way of spelling out a divergence from a particular index, right? For example, if you were looking for divergences, you could use an RSI comparison between altcoins and Bitcoin, right? So say Bitcoin is your index and your altcoin is right an underlying piece of your index. Then you could use it to spot divergences to see if one is speeding up from the other. But you know, in the end, I use it now. RSI is great. We use it. My mentor uses it in stocks all the time, and he uses it to spot divergences. At CwK's question, guys, is do I ever trade pre-market? If a stock gaps up 5-10%, can you trade a pre-market? Brother, you totally can trade a pre-market if you want. The problem is going to be, who wants to wake up that early? No, honestly, I haven't made a pre-market trade in years. You know, I don't want to be at the computer that early. Not my cup of tea. I got a lot of things I want to do in my life, and it requires this bodice to be in peak shredded condition inside and out. So, you know, I gotta get out and about in the morning. I can go for a little walk, maybe get a little sun, dip my toes in the beach water, get my toes in the ocean, and then I get to the computer. Good, 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 good. Hey, Kyle. So, you know, my stock boot camp, which is basically just a trading boot camp in general for everything, it's designed to take somebody from A to Z on everything there is to know about trading. But it's designed in a specific way to really lead somebody into all the different portions of trading. Meaning, first month, so it's 60 days long. The first month, 4 days a week, and it really ends up being about six weeks. We just talk about, I go on the tube, I go on at 8 p.m. Eastern time, live for a couple hours, and we go into the actual course work, right? These are chart patterns. This is how you manage your risk. This is how you scan. This is how you do your software, blah, 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 right? So that's going to take 4 to 6 weeks, depending on how smart the class is or how quickly they're picking it up. Sometimes I'll go back through certain portions of class and just do it again. Make sure everybody gets it. Now, in trading, right, you guys have all read trading books, right? You guys have read trading books, watch videos, YouTube videos, right, all this kind of stuff. You can't learn trading like that. So trading is a job, right? Imagine you're going to be a brain surgeon. You try to be a brain surgeon by watching some YouTube videos. All right? It doesn't work like that. It's a job. It's a profession. So to learn it, you have to have that type of, I'm not saying you are going to be as studied as a brain surgeon or anything like that, but what I'm just trying to prove a point of is that it's a job, right? And so there's a certain way to go about and study it, and it can't just be done by watching YouTube videos. So we have live class. Now you have all this book knowledge from class, right? Because when you're reading a book or you look at somebody's slides, nothing is moving around and you're not doing anything, right? You're just looking at it and training your eyes to different patterns. And you're like, okay, that makes sense, right? Easy enough. But then you go and try to do it yourself. And it doesn't make sense, right? Because everything's moving around and the lights are on and all of a sudden there's a disconnect. So that's true, Fod, actually. So how do you solve that disconnect? So what we do is I trade in front of my students live. I whip out my trading platform. I have my profit and loss, everything. You actually watch me hit the buttons, right? How do you take it from book knowledge to real world knowledge? You got to watch somebody do it, right? And so I have a chat room and I call out the plays and everybody's typing into each other like, hey, did you watch TV last night or whatever, right? And then I'm out there trying to show them how to make money. And I trade in front of them. So I'm calling these things out and showing them the charts as we go, which is really, really important. So now you're starting to connect all this stuff. Then what we do from there that's very important is at the end of the day, 3 days a week, we do what's called trade review class. So I take my P&L for the day, which is how much money I made or lost, and then we talk about it. What happened today? Did we make or lose? How much did we make or lose? Okay, let's go through each stock. How did we find this one? How did we enter it, exit it? What was the pattern, right? What's going on? And then we reverse engineer it. Some days it's like, okay, I lost, right? And we got to talk about it. Like, guys, I shredded myself today. And then other days it's like, hey, awesome day. But we have to talk through those things. And then you'll be able to start seeing them. That's when you can start putting this all together. But then while I'm doing this, then what we're going to be doing is getting you guys ready to go on trading simulators of your own. So you can go on trading simulators of your own, right? And now you're going to be practicing the patterns that you're learning in class that you've been watching me do. And that's when we start to really kind of connect the dots from going from book knowledge to actually seeing me do it. Then you go out and practice it. And I know I have certain metrics in my head that if I see, like if you can do these when you're simulating, then at some point we'll know when you're ready to trade live, right? If I can win 4 out of 5 days a week, I have a business plan done. I have a list of go-to setups. Go-to setups mean like setups that I've internalized, that I like, that I own, that I know how to find. Like I know every single detail about them. And then bam, right? Now we've got a full-fledged plan on really what to do. And from there, you go live. Our students have lifetime access to class. I have students that come in from 4 or 5 years ago. They just keep retaking class. Now, they might not even need it, but, it ends up being a Tuesday night. And their wives are watching, Desperate Housewives of Anchorage, Alaska, Desperate Housewives of the women of Bangladesh. And next thing you know, fuck that. How cool would that show be, right? And then next thing you know, they're putting on their headphones and they're like, let me go see what's going on in class, and that becomes really, really important because I see it all the time. So people are like, hey, get out. They'll be typing in, I can see what everybody's saying. I'm like, what's going on? He's like, my wife's watching TV. She thinks we're having a date night. Right? It's pretty cool. And so I have students that stay with us for years. They come in and hang out and do all that fun stuff. But I do got to get going. You guys, if I missed any questions, I never do it on purpose. Please email me with any questions, and I will make sure to get you guys all of that information. If you have any questions or you just want to get a phone call about any of our classes, you could just go on the Bullseye. Man, fucking Josh, where's that page? I always forget it. Oh, yeah. You can go on Bull. I don't even know our website sometimes. Oh, yeah. Here, you can go on there and check out the video, see what's in it. But there's a contact page on there where you can just sign up and get a phone call and all that fun stuff. And I'll have one of my guys, or I might myself do it. I'm in Destin, Florida right now. And boom, we'll get up on a call and see what's up. I'm a pretty good teacher, I will say. Even though I do have I swear a lot, but I don't swear at the students. Unless they complain about my mic. Cool. Guys, I got to get going. It's been real. It's been fun. It's been fast, just the way we like it. I will see everybody next week. As I've told you guys in the past, if you have specific things that you guys want me to talk about or teach, just let me know, and I will definitely, I can do a session on whatever you guys want. All right? Now, nobody ever emails me with those things, but I'll just wait around. Cool. I love you guys. As they say in my country, peace in the Middle East. If I could turn back time, if I could find a way.